Watcha, everybody. Welcome to the Flow Show, 27th of Feb, Thursday. Getting through this week pretty quickly at the moment. Hope you've been doing well. Morning, K-Man.
Good morning, Ryan. Good morning, everybody. I hope you had a great event on Tuesday night.
Yeah, a bit of a late one, bit of a rough one. Very loud as well. I don't mind a loud concert, but this one was particularly loud.
Oh,
my ears are still ringing.
Anyway, we're getting older. Maybe you should put in earplugs next time.
Yeah, definitely get some ear defenders. No, not a chance. Right. Yes, I'm back. I'm back, Durej. I'm back. Let's kick off with what's going on in Japan. Not a lot, really. But Japan's top currency bod, Mimura, says that there's no disparity between recent yen moves and recent positive GDP and domestic inflation data. He says import prices are also rising due in part to FX factors. Raising the old comment that there's always two sides to currency moves in terms of what effect it has on your economy. They don't like it weak, they don't like it strong. So get what you can given, I think. Over at the RBA, Deputy Governor Hauser says optimistic on inflation, but needs confirmation. Data washing as usual. Says labour market tightness remains a challenge to inflation. Over in Europe, everyone wants to spend some money on defence. They can't find it to spend normally on their economy, but they're going to find it to spend on defence. German Foreign Minister Baerbock, for however long he's in the job, says it would be an important step for the EU to loosen debt rules so that member states can increase defence spending. There's always a catch. They want to raise more money, spend more money, but they don't want it counting under the EU rules. There has been chatter that they might start dipping into the COVID recovery funds thing that is still waiting to be used. And there's some other funds we're still waiting for, aren't we, Cave? The ones that were due in 2032, that old stuff. I can't remember what it was for in the end. Probably from the GFC.
Yeah, the European recovery funds should be paid out. Yeah,
That was
perhaps before we step into the grave.
Yeah, exactly. So anything they can do to spend money without it actually being counted in the rules, typical Europe. We've had some CPI data out from Spain, first numbers coming for February. So this fairly important. CPI rose to 3% from 2.9%. The Eurozone measure HICP stayed unchanged at 2.9% year on year. But as you can see there, the monthly numbers went up though in the CPI. So still sticky levels in Spain anyway. Tomorrow we get, I think, Italy and Germany. It might be France and Germany, can't remember. But the German regionals will pop out. They've been a bit wild of late. But the market is going to be looking at these numbers for how it changes its bets for the next ECB meeting and what they do then. Is it going to be another cut? Is it going to be a cut and a pause? Is it going to be a pause? Who knows what it's going to be? What are your early thoughts on that, mate? They're going to keep going, or some of the hawks have been a bit more vocal recently?
Yeah, exactly what we were saying on prior shows as well. And I said yesterday, it could be a toss-up this time. I'm not sure whether the next cut is right now. When are they meeting, by the way?
I think it's
6th of March.
Yeah, 6th of March.
March. Oh, sticking my neck out. Perhaps this time they may wait a bit because there's still that uncertainty on tariffs, etc. And maybe they are just going to pause one meeting, but likely hint at continuing the next. That is a possibility, a real possibility now, I'd say.
Yeah, I think so. I'd say they cut at this one, and then I don't know what they do thereafter. But, they've still got their neutral rate, which is still quite a ways down. So who knows? Well, it is a call unless you're Belgium central bank head wunsch, in which case he's still got his 50 pip wide target on that neutral rate. Right, anyway, moving on, a bit of data from the US yesterday, housing numbers or housing data. We've got revision to building permits, which was slightly lower than the prior number. We've got new home sales as well, which were also a bit lower than expected. Where were they? In there somewhere. I can't find them. I'm going blind. There we go. 657,000, down from a high revised 734. January numbers, so maybe a bit of seasonality in there, coming off the end of the year, Christmas and whatnot. So we just keep an eye on that for the future. Sale prices, though, held up. They were up 3.75 from a year ago, and up some 19 odd thousand actually dollars from last month as well in December. But as I say, it's a bit of a funny period there. But just a couple of softer numbers in the housing sector for the US. Fed Barkin says that government job cuts are not expected to cause volatility in GDP. We'll see whether that's borne out or not. Fed's Bostic says inflation is high, but we have seen a lot of progress. Need more data to see if January's inflation was a bump or trend. He's thrown out some jobs numbers because we've got NFP next week. It says estimates for jobs break-even rate is as low as 75 to 100,000. So that's the monthly number that keeps things ticking along nicely, which is a bit lower, I think, than what some of them or what we've been used to, more in the sort of 150k mark.
It has come down, Ryan. It has come down. We used to actually, yeah, as you say. I mean, in former years, before COVID, let's say, the number was rather around 150, and in earlier days even 200. Yeah, that number has gradually come down, and I'm not surprised of that 75 to 100k number.
Yeah, it's not a big shot because the jobs market has been very solid. So the break even that will come down a bit, just to keep things ticking along. But it just gives us an idea. If we're expecting 200k and it comes in 75, 80k, it will look a soft number. But if it's within that sort of break even range, then it's no big deal. It just gives us a number to gauge things off for the longer term. Mr. Trump, been busy as always, talking about government jobs. According to Fox News, his administration has directed agency heads to prepare for large-scale reductions in the workforce and big reorganisation that's coming apparently before or by March the 13th. So we had this voluntary redundancy program thing going on, got around 75,000 workers locked in. That's not been the end of the story because they're just going to basically probably fire however many they need to. So we've still got some potential job cuts coming. We might see this 75,000 popping into the NFP number. I'm not sure because it's January data. We'll be getting next week, and the deadline was February for all these job cuts. So we might not see that impact in the government numbers, but as we've been saying, it's a known unknown. Right, I might need some help with this, Kay. All this tariff stuff from Trump. He started off yesterday saying that about auto tariffs, saying just let it happen. Then he was out late after that saying he's not stopping the tariffs. Tariffs will go on, not all, but a lot of them. He said Canada and Mexico tariffs to go into effect April the 2nd, which some took to thinking that he was talking about the first round tariffs, the immigration drug stuff, but that might not be the case. It might be the reciprocal stuff. He said he'll be announcing tariffs on the EU very soon, and they'll be 25%, saying that also the EU can try and retaliate. So we've still got the first round tariffs potentially happening next week, but the reciprocal ones are punted to April the 2nd. Is that the lay of the land, or has he tied them all up together?
I think it's been a very confusing press conference yesterday. Because the deadline was March the 2nd, right, on Sunday for Mexico and Canada, and now it's seemingly pushed back again, or at least taking the effect on the 2nd of April. I think his administration is a bit desperately trying to crunch numbers that we were talking about on earlier shows. They haven't got the numbers ready yet. That I think is where we are really. So he has to delay the whole thing. That, of course, gives the market to think, and everybody to think that Mexico and Canada will have time to negotiate, which is likely the case, because Scheinbaum is trying to prepare a plan, and she says that she would have the plan ready about next Tuesday or so. And then she's now trying to get an appointment with Mr. Trump as well, and that is probably the closest we are to knowing whether we are going to get a deal or not. And of course, yes, the fentanyl is just something to hide behind, and immigration is probably going to be the bigger thing, and cheap products flooding the U.S. market from the Mexican side.
Yeah, and
Personally, I don't think we have seen nor the end of it, or and we really don't know yet exactly which side it's going to go, because if Trump, for instance, and then if you look at Europe, he says autos will be in it and some other stuff as well, but they never named the other stuff, or they say like 25%, but it could also end up being 15%, because weeks before he said that Europe is already playing nice. So I mean, it's very confusing to me.
yeah, exactly. I mean, again, we've had comments, like you say, from Scheinbaum, her security officials having a meeting in Washington today. The finance minister has been in talks with Bessent. She even said that the USMCA trade deal revision will probably come before the planned timeline in 2026. So they seem to be working on a lot and going all guns blazing. So you'd expect perhaps to get a deadline shift. It makes no difference to Trump, really. If people are negotiating and they just haven't dotted the I's and crossed the T's, there's no point in going with a deadline. But again, I don't know if you've heard different K while I was off. It's still pretty quiet on the Canadian side in terms of updates. Mexico going all guns blazing, and Canada seems radio silent.
Yeah, they're from the Canadian side. Yeah, they said something about probably needing to up their defense strategy, military spending as well. But there's been a lot of pressure from the US side on Canada, Navarro, and another guy as well. They were really putting a lot of pressure on. There's a lot being thrown at Canada right now, and as a matter of fact, I saw in the news, it's not your biggest headline, but if you look, like a company came, Brookfield Asset Management has made a decision to move its head office from Toronto to New York, and there is a lot of pressure on Canada, I think, right now. So that is a fact.
Yeah. And we've got to remember that the end game was always to get people around the table. So, the deadline and the threat of deadlines is something for the market to jump around on, but the end game is still to get a deal done, whether deadlines get pushed or not. So just got to keep an eye on that end game. Well, Europe's in a bit of a tizzy this morning after Trump saying he's going to hit tariffs on Europe very soon, 25%. The EU issued a statement saying it will react firmly and immediately to US tariffs. And just to show you how many people are running around with their pants on fire, it got the French Armed Forces Minister out of his hole, saying that Europe needs to react in the firmest manner possible and as soon as possible to Trump's tariffs. So there you go. Even the army ministers are getting their oar in. Right, speaking about the Ukraine stuff, Trump said Putin will have to make concessions, wants to see if we can make a deal with Russia before talking about loosening sanctions. Apparently, he wants to get as much land back for Ukraine as possible. We've still got this ongoing minerals deal that is close to being put signed, sealed, and delivered. That might be today, tomorrow, weekend, who knows? And then we'll get the moving on to the next phase of things for that. I don't know if anything else floating about, Kay, that you've got.
Starmer is going to meet Trump today, is he?
Yeah,
He's going to try and talk. Well, at least the headlines say that he's going to try and get some support for Ukraine going again. But I guess he's going to present some defense plans and trying to be nice to Trump and make sure that UK avoids tariffs and things. Now that is something we may hear a few lines coming out of that later tonight or tomorrow morning.
Yeah, well, I hope he's got his knee pads with him when he's on his knees kissing Trump's
Yeah,
ass.
yeah.
That's going to be the likely outcome from it. But yeah, not expecting any market moving headlines to that. Well, maybe it depends how Trump wants to play him. If he wants to have a little pop at Starmer and what his government's up to, then that might be something that the pound might take notice of. If he doesn't like him and wants to hit him with tariffs as well, not that there's much going on, but you never know. But I'm not expecting too much for that. As I say, probably a bit of ass kissing from the PM our side. Right, let's get stuck into what's going on in markets. And it's a day of zones for me. You know, I love a zone, and we've been zoning all over the shop in various different pairs and assets. We got euro dollar yet again 105.31, bang on the top of that zone and pulling back yet again, coming down to this other support zone 50.60, which is more short term, and we can't get through there at the moment. So we've got an 80 pip range in this one. The trend from the 102s is still valid, but if we can't get through this 105.30s on another couple of attempts, then we're probably going to see a bit of a steeper pullback. Might be then see it through this zone down to the 104s, maybe back down towards this area. And I'm still not expecting a big break if we get one through this 105.30. Normally, price action like this, I'll be looking at a potential buy stop, you know, maybe 35.40, something like that, which might still be valid, but there's a lot of traffic still on the way up. So I'm not expecting any other pair. I think, yeah, break 105.30, we might be 106.50, something like that. But euro dollar, we've got the 106 level coming up, 105.90. We've got these fibs in the way. So I'm just not feeling like any break is going to, you know, be shooting up to 107 in a blink or anything like that. And I actually think that if we do continue to fail here, then a steeper pullback is more likely. I'll be more inclined to think it will be a deeper pullback, probably down to 104 at the least, maybe even a move down to this zone here. What are your thoughts on this one, Kay? We just can't get through that upper level, can we?
Help, I'm stuck, is my thought here. Yesterday there was quite a few impetus to buy the thing, and then yeah, Trump came out and a couple of other things, and yeah, that solidifies that top again. On the other hand, also as you say, I mean, we are holding the 104.5 now, which is interesting. This yeah, there's a lot of stuff going on. Mike says like the currents on geopolitics, but I also think there's a lot going on in positioning and crosses and stuff. And then one day the euro is under the cosh, the next one it's bid. So yeah, there's a lots of pushing and pulling there, and we need breaks of those areas. I just want to remind people that we are end of month. Yesterday we did not really, and I think a lot of people were waiting for them. We did not see the US, or not a lot at least, the US corporates buy dollars only at the very start of the US session yesterday. But then I think the market was really waiting for it and failing to see those buyers in dollars. yeah, the market just decided it was time to sell a few. But here we are again, back in the middle, and trying to decide where we go from here.
Yeah, and this is pretty tight, even as we're getting all those tariff headlines and whatnot flying around, which tells you that the market isn't really maybe paying attention to that stuff until we get some big headlines on that, like tariffs are actually going on, or something like that. Aussie dollar, another one, playing nicely with the tech, got up to the 64s, came close to the 38.2. Ran into a brick wall. We've come all the way back down, and look, bang, right off the top of the zone down here. Now this zone's a bit more shorter term, although there is one level that's a bit more longer. The 62.70 level is a bit longer, but here we are holding the zone, and this again, it keeps this move going, the uptrend. But it's a tale of two stories. You know, you've got the short term bullishness, and you've still got the longer term bearishness. The fact we couldn't get through that 38.2 fib, and couldn't even really test it, came close, but not close enough. It keeps the downtrend in motion. This is why fibs are so important to me, because you can get sucked into the short term and thinking, yeah, this is rallying, this is going to 65, going to 66, whatever, but keep it in the context of the bigger picture, and we're still in a downtrend, and that downtrend is still rally. This just could be a bit of a dead cat bounce, and we go on to head lower, or we hold here, and that gives the bullish move from this a bit of potential, and then we go on to move higher. So again, we're back in a bit of a coin toss moment here, okay? And as I said, this zone has been going on back into 2023 as well. So this isn't small beans down here. Hence why when you get a break, you want to see it holding. So there might be something for longs on this one. You still playing longs, Kay?
Yes, I am. Well, I actually started again. I let most of it go the other day. Luckily, around the tops somewhere around that 63. I sold somewhere around 63.90, and then afterwards, since it failed, I sold the rest out. I think around 60 or 70 or so. And now I started yesterday again, actually, around the figure, and just above, and see where we go from here. I'd like to get some a little lower, perhaps into the 62.5 zone as well, but it shouldn't really break below there, 62.30, 50 or so, and that's going to be the maximum I will allow. But yeah, I am just starting, nothing really big yet.
Yeah. But this is another example. When you have these big longer term levels, you can see 2024, 2023s, all the way back here, 2022s, we've had action around this level. You can get a bit of noise when you're trading it intraday, like all this stuff, up and down, up and down. But when you go away from it for a while and you come back, once again, you see a level reassert itself. And this is why these levels become important. Because I think if we are breaking under this 70 level, we're going back into this noise. But if we hold here, then this, all this stuff, it's very supportive, and then you might at least get a move back to 64s. So I may even have a little look at this myself, and we got the 55 DMA parked right on the bottom of that zone as well. So there's a bit of confluence for that as well. I'm still short. Yeah, go on, mate.
Yeah, no. I'm thinking now the 64, since Euro Aussie has been going up a bit, or some Aussie crosses. That 64 now, it may have to wait until Euro dollar would reach 106, perhaps. It feels like it's taken its distance a little bit from that level, and if you look at it roughly or so percentage-wise, it may coincide now with a 106 in the euro dollar, which would be big. And those are like gateways, I think, and even that 64, 30, 40 there, maybe needed for confirmation to really break higher. If those levels go, then I think we're off to the races. And also in the euro dollar, we have this 104.5, 105.30, but then you have 70, 80 points around it, which is your 106, 10, 15, or figure 15 on the top side, and 103, what is it, 90.05 also on the downside, and those will probably be the real break levels.
Yeah. I mean, euro dollar. Yeah, that 106 is big, but it's the 107 is bigger for me. That's one of the real big long term ones. But it's all steps though, and it's got to get through all these little steps. Yeah, I was going to mention just quickly the Aussie Kiwi because that's still holding pretty steady. I thought we might be having another mooch down, but we can't get down close to this 50 level, which I'd like it to get under and back down to 110. So we're still keeping this. So it really is a bit of a dollar story, even though we've just seen Aussie dollar coming off 100 odd pips. Overall, it's a bit of a dollar story because, as you can see, this hasn't been doing an awful lot either on this side. One other I want to have a quick look at, and then I might pass it over to you, Mr. K. Where am I going? Missed it. Oil. Just took a look at this morning. You're probably already looking at it anyway, you guys. But another zone potentially in play for this one, this support area down here. Let's stick it on a daily because it is very much a big long-term zone as well. So it's all about the zones. Now we've had little breaks under, as you can see there and there and there and there, but we haven't, until this point, we haven't really managed to hold under it. But this was a resistance move anyway. Then we broke it and held it as support, and we've been holding it as support since 2021. Okay, got a bit of a safety net down here, 61.87. That line is where we've had these breaks under, but they haven't lasted. We might be heading to this zone as well. Now, could it hold as support again? Absolutely, but I think there's a bit of a risk with Trump and his drill and pipeline restarts and whatever he wants to do, that if we do get a test down here and a break, that might be one that keeps on going. But either way, you've got two choices. If you're trading oil, you can still try the longs, 66, 67, because you don't need to be too wrong if it is going to break through that level. And as you can see, when it's held, you get decent bounces off it. So there's potentially bucks to be made, but also potentially bucks to be made if we do break, because there's a lot of empty space underneath some of these little lows that we've had before. So that's one to keep an eye on as well. Quick look at yields, because we've had this proper break now, it seems, under the 434 area. We're holding it as resistance. Again, forget the MAs, don't do tech on yields. So this will be down to price, but the price isn't allowing the yields to get up above 434. And as I've been saying, 420 is the next level. Might be we're heading on down there. A bit of a divergence, okay, because dollar yen is back up.
Yeah.
Is that might that be month end stuff, or is just different something different going on?
Possible, but as I've been saying, it seems like the yen is more glued to the S&P than the yields right now. It came down obviously on the yields, but since the yields are stabilizing a bit here, it looks to be more plugged into S&P / risk in the confusing side of things, because risk is very vague and changing right now. But it does seem to be more plugged into the S&P than anything else. That is sort of how the yen is moving. But yeah, you were on those yields there, and for me, that's what I always said. For me, the overarching neutral zone is within sight now, and we're not too far away. We know how the bond market tries to anticipate or needs to rebalance so often, but I think the 420 for me is really give and take. Of course, some BPs is really the neutral zone. If you start to break below, then that's probably going to add to potential dollar weakness, and then we may see finally that break of the dollar yen, of that mid 148s or so coming. But until then, yeah, it's bouncing up and down, but it's holding those lows on the dollar yen. And actually, I think it has to do with the euro yen as well, which I will show it once more. I've been showing it on all the shows. But I think it has to do with the euro yen as well. There's a very big zone there, 155.5, 156. And yeah, it keeps on bouncing from there. And I think that's obviously the yen crosses have a lot to do as well with the moves in the dollar yen.
Yeah, I think this one's due for a decision time at the moment or shortly, because we've got this 148, 80, 85 area when we've had these little knocks below, but it can't break and hold below. Yet the bounces are still getting weaker. We had that 150 80s break that held, and then we were worried about the 150. Now that's starting to hold. So I think we're either going to take another leg lower, and if that's the case, I think we're heading for 147, or we're going to finally, the buyers are going to, make a strong case here, and then we might see a bigger bounce, maybe back up towards 152s, somewhere like that. So, yeah, I'm not sure what to do with this one.
I think we also need to let month end go by, because there has been some pretty notable divergence between things Nikkei and between the Japanese equity markets and the rest of the equity markets. And once the month end is over, then I think we may get some kind of renewed interest, and also yen yields are also getting interesting, but that's one for the longer term, I think, unless they've already started in this move in the yen. But yeah, I'm continuously thinking about what the Japanese whales will be up to once the new fiscal year starts. That's going to be important. Usually March as well, the last month of fiscal year, starting next week. That's usually a period where the yen tends to move, because the corporates have to close for their fiscal year as well. So yeah, March could be a very interesting month.
Yeah, and it's also a big central bank month as well. So we've got all that to deal with once we're over the end of month hump anyway. So it's going to be busy, busy, busy. Mike asking about the MPC meeting. I don't know. I've not read a lot into what's going on over there. They're probably going to talk the same old waffle. And if it's good news for China, or if the market likes it for China, yeah, you'll probably see Aussie reacting to it. Don't know when we're going to get another RRR cut. That has been half touted for Q1. So that's obviously a little short-term input for the Aussie dollar. If you get an RRR cut, you probably see Aussie dollar rallying 30, 40, 50 pips quickly on something like that. Though how long that move lasts, usually not for long. Don't know if you've got any views on this MPC meeting, Kay?
I've got the impression, but obviously they will have to talk about geopolitics and stuff over there as well. But they are, I think it's more preparation of their real estate, and maybe the revival, or trying to revive their financial markets. But we also know that PBOC and the big bots, they want to keep very, very tight leash on whatever happens in their markets, especially about the financial markets. FX markets is still very much a guided market as well. I'm not sure whether we will see an impact on Aussie, Mike. For now, I'm rather thinking it won't. It won't do much for Aussie, whether it's up or down, unless they come out with some world-shocking headlines also. But I wouldn't think that it impacts Aussie too much. No.
Yeah, and I'll be definitely keeping an eye on it for what happens in dollar China, which is getting back up towards that 728 area. I'm a bit gutted. I didn't quite get down to that 721s, 22s area to get a bit more off my shorts, but I don't know. I might think about adding a little bit up here, but still got headline risk. We still get driven all the way up into the 730s on tariffs and whatnot. Anyway, what do you think this one does if there's a deal done on Ukraine, Kay, can you see the yuan strengthening a good chunk?
I think there's, if I'm not mistaken, there will be some chatter as well, but they're still trying to put together a meeting between Trump and Xi. I think that's going to be a much more important than. One could argue that if, let's say, we get a relatively positive outcome, well, I mean, a relatively positive, and again, I said like there's a difference between handling money and psychologically thinking what we think is reasonable or not. But if we get for markets a reasonable resumption or a reasonable solution, it may kind of support the yuan a little bit, depending on what Russia gets. But I really think it's more. It will more have to do with direct consultation between Trump, his team, and Xi and his team, and perhaps even what comes out of those of that dual meeting that starts next week in China. They're
Yeah,
more
yeah, very
important
much
than
so,
the
mate.
Ukrainian thing for them.
Yeah, cool. Right, I'm going to kick it over to you, mate.
Thanks, mate. Just guys, let me know what you want to look at because we've already looked at quite a bit of stuff with Ryan and I just wanted to re-show what I also showed yesterday. This dollar yen keeps on coming back to, well, the prior low here, but this channel here looks to be that every time we hit the bottom of the channel, it starts to bounce again. It has a lot to do with with the euro yen, in my opinion. And I'm first going to show the longer term. I've been showing this already a number of times. This is strong. This is very strong here, 155 and a half up to 156. This is really, really strong. And we are trying it earlier in February. We are trying it several times. Look at this, like 4 or 5 attempts over the course of the week, and we keep bouncing. Now, if you go into the shorter term, what also happened this week is that every time we get above 157, when from Monday, from the start of the week, we are finding sellers, okay? That may be month end. That that's somewhere what I'm thinking that this could be month end. Okay, it is a small intermediate zone, but I'm more thinking in the wider picture that this could be just month end, and then we see once we get out of February how this will be. How this will be impacted once we start March again. As Ryan also said, quite a big, and we have ECB, by the way, to start the month of March with. So that will likely be a decider on where it goes. Right here and now, I'm leaning towards. I'd love to see actually a move back up in the 158s just to see what's going on there. I'm trying to play this 157, but just because I've seen it capped since the start of the week, I'm keeping it extremely small. So yeah, I'm rather. I would rather say like sell the rallies, but wait for it to get up to 158, unless those doing intraday. Okay, you can lean against this 157, 25, 30, but buy it back before the zone here because it really showed up. What happened? The metals are losing their shine. Gold dropped below those past two lows, but it's still it's starting to hold here. We had this attempt earlier in February around those prior little spikes. We had a move down here. Yes, we broken a bit of a trend line. Yes, we broke another trend line, but this 2860 up to 2880, there could be already a bit of support incoming. Some people are thinking that we have seen the top and we are going to go back to much lower levels. Well, much lower. We have seen these kind of moves in the past, somewhere in the 27s, but one step at a time. I'm saying because if Trump slaps on tariffs, I'm surprised half yes and no. The dollar has regained some of its recent weakness. That is gold is lower because I would have expected that with Trump threatening to slap tariffs left, right, and center again, that gold would have held much better yesterday, but it didn't. And interestingly enough, it did not see too many buyers in the Chinese or in the Asian market. So it has to get back above 29 now to retest here these 29.20s. If that goes, then we are going back up, I think. But for as long as that caps here, we may indeed see a bit more. And look at the U.S. session, because usually at the start of the U.S. session, something moves in those metals. Okay, yeah. Silver, I think it's really undecided. We're turning around the 38.2 of this move that we saw the start of 2025. Pretty neutral for me right now. You have a look at if it comes down here, 31 and a quarter down to 30.85-ish. How it reacts over there if we would see it. But again, 32, 30.50, that needs to give way now to revisit those highs. Zhao, dollar selling, it's actually, if you look at the equity divergences, it may be the opposite, but the signals are extremely weak. Where the signal is okay-ish is actually for euro yen to see sellers, but I find the signals on the dollar too weak to really bank on it. It's a toss-up this month, Mike, because we have seen. Sorry, Jar, because we have seen so many different moves over the past few days that the hedgers may have been forced to hedge a bit dynamically, and it is going to be very little left over to hedge for the month end. Okay, so I'm leaving it in the middle for this month. I'm not going to express a strong opinion on what month end flows may be. Swiss, yes, we have come lower, but we hold this, as I was saying, in the dollar Swiss, we were holding this 61.8 of the December January rally, and that is now your next marker. It's coming back up. Watch what's happening around 90.0520 for the dollar Swiss, and see what's happening there. There's a lot. There's clouds and stuff activity as well in this area. So this could be an interesting one. Again, I really don't know what's to do on the month-end flows. I'm not in the Swiss right now, but I will have a look if ever we see a surprise move higher in the dollar Swiss. These 91, 90, 91 somewhere may be looking a bit juicy for trying the other side, but on the tip of my toes. Swiss is also moving around with risk, and I thought that we would have a break here down in the Euro Swiss, but it's actually failing. This is what we see on a lot of those crosses. As we were saying as well in the room this morning, there's a lot of bumpy stuff going on in the markets right now because the market is looking for a direction. We've had that big spike in the dollar into Trump's inauguration. Now the market, a bit earlier than I thought, is now trying to reprice that and seeing, oh, may there be some weakness coming in the US, but yeah, we still don't know, right? So that's why we see those bumpy moves all the time, and that I think makes it. Unless you have like long-term positions which are already deeply in the money, that makes it a bit difficult to trade for me longer than a few sessions right now. And the Swiss that I just showed is again an example of this. Here's your snail's move, but it's still doing pretty much what it did in this move. But 60, 82, 82, 56, 82, 50, 55 up to here, it is a bit of a support zone. We are around those prior lows that we saw on the euro sterling. this is the hit that it got on Trump's announcement of potential tariffs, I think, on the euro, if Europe, if I'm not mistaken. But already before, we were like struggling to keep above 83 the figure again. So this might be, if it goes through 82.60, we may be in for a retest, but just let's not forget that long term, right? Because it is a huge. It is huge down there in the low 82s. It is really huge. Keep that in mind. Even if we see a break lower, keep it in mind if we would get there. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Great stuff as always. Thank you all to our viewers for coming and watch us on the Flow Show. You'll catch us all on Face later on as well. So have a great day, everybody. Trade safe, and we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.